I'm Eric Birch with MiningClips.com, and we're at the PDAC Mining Convention in Toronto, and I'm speaking with Mickey Fulp, the mercenary geologist. Welcome back, Mickey.
Thanks, Eric. Always my pleasure.
You know, last time we spoke, we were talking about our silver. Is silver attractive? Are silver equities attractive at this point in time? And you said right now the silver ratio is about 75 to 1, and you were looking for the ratio to get more or less above 80. And here we are, a short time later. There's been a nice move in gold. Silver's lagged, and I believe we're at 82 to 1 today. What are your thoughts?
Well, this is quite unusual, gold-silver ratio above 80. I can only remember once before when that happened, and that was in the early parts of the global economic crisis in November of 08.
Right.
So when the gold-silver ratio, and it actually went above 83 a week ago. It's come back a bit as gold's risen, silver's starting to catch up, but that gives a buy signal for silver with the idea that gold is still money, but when silver gets that undervalued, you buy silver instead of gold, and then when the ratio goes back down to something more normal, say 55 or 60, you trade in your silver for gold.
And so are you now looking at silver investments at this ratio,
well,
or are you going to let it sit for a bit?
If I was buying precious metals right now and had my choice of gold or silver, I would buy platinum, but because that ratio is really messed up. I haven't looked at it over the last couple of days, but it was at 0.75, the platinum to gold ratio, 0.75 last week. And I only know of one other time that happened, and that was in July of 1982, since Nixon took us off the gold standard in 1970. We track all this stuff. We've been tracking it now for, we have data back for 45 years. But that said, if you want to buy silver, if you like silver, this is absolutely a great time to buy silver.
Fantastic. And so what companies are you sort of looking at? What sectors are you looking at right now for investments and for recommendations?
Well, with the run on gold, and we have to go back to what I said last time we talked in January at the Vancouver conference, I felt very comfortable with gold in that range of 11 to 1200. I didn't really think it would blow past resistance at 1180 and 1200 the way it has. It looks settled in, at least temporarily now, in the mid 1250 range. It's got major resistance at 1300. That said, to answer your question, I think now's the time to start looking for some good gold companies. We don't know if this rally's going to stick, but there's reason to think hedge funds are buying. Short squeezes have certainly happened with this big run on gold. And there's lots of good gold companies that have been down and out for quite a while. So I think there's two sweet spots here. It would be the advanced explorers and developers that may be takeout targets, and then certainly the small to mid-tier gold space I think is going to merge and acquire, because that's really where the next round of money is going to go, and those companies can be most profitable because they can be lean and mean. So be looking at gold companies. Copper is finally looks like it's broken out to the upside, and I'm always looking at copper companies. So those would be my targets right now.
Right. Well, and on the copper front, it's interesting. A couple of items that have been in the news over the last month. Codelco came out and said we expect copper prices to remain range-bound through to the end of the decade, and they're not cutting back on any production. And as for the cost production curve, we see that about 80% of global production is still making money at $2 copper, yet we've seen copper rise to $2.28 yesterday.
Yeah, I'm not sure I put a lot of stock in those numbers. I usually don't listen to much that Codelco has to say based on their track record of being wrong so many times over the last 20 years or so. I don't think copper can stay down at these levels. In terms of 80% of copper making money at $2, I'd like to see how those costs are calculated. those are probably cash costs.
Not all
Probably-
sustaining.
Absolutely not. I don't. We're seeing copper production come off very quickly. The demand for copper last year was still strong. It was a little less than normal, but I think the copper market's not in for a very long time in the doldrums myself.
Well, it's always a pleasure to speak with you, Mickey, and thank you for your insights here today.
All right, thanks a lot, Eric.
For miningclips.com, I'm Eric Birch.